Yeah, my name's Dylan Guzzle. Graduated in May of 2018 from the Huntsman school there, and was recruited out of college by Lansing Trade Group at the time. And we were acquired by the Andersons back in January of 19. So I was with Lansing just about 7 months and been with the Andersons ever since. And so we're a physical commodity trading company that we specialize mainly in the physical movement of agricultural goods. We do also trade some energy goods. We have a liquid natural gas division, an ethanol division, and there's one other energy group. I can't remember what they're trading right now. I want to say vegetable oils. So it's not, I guess it's not actual energy, but it can feed into some markets like that. I don't understand that side of the business entirely, but I specialize mainly in the Northeast soybean market. And so primarily, kind of focusing on the geographical region that I live in up here in the Northeast. I live in upstate New York right now. And it's kind of interesting. We focus a lot on kind of the regional supply and demand and how that can affect what we call the basis prices. And so all of our pricing on the grain side of things is done against the futures market. And you have a basis for an area that kind of sets your actual price differential versus what's traded in Chicago. And so that's kind of, what everything goes off in the local area. And so everything we do is hedged. So we don't have any kind of flat price risk in what we do. Everything we do is kind of more point to point. Understanding the logistics, and then trying to extract extra margin based on kind of knowing our freight moves, knowing what we can get somewhere for cheaper than we had already planned on, buying something in cheaper elsewhere, selling something out, higher somewhere else. And kind of, we call it an arbitrage around our kind of books that we like to do. So I'll go a lot more in depth about kind of what we do and, actually what our company is and some of the other divisions and, kind of where we're located and whatnot on Friday. I believe we're going to be doing that at, oh shoot, I can't remember what time. I'm doing an info session on Friday though.
I believe it's 5:30 in Huntsman school. So
5:30. That's right. Thank you. So going to be going a lot more in depth on kind of, the different markets we trade and whatnot. But did just want to give you guys a kind of brief intro on what we do. Yeah, just tune in Friday and get down to it a little more.
Hey Dylan, could you talk just take a minute just about the internship opportunities, full-time opportunities in Anderson's?
Yeah, absolutely. So we're recruiting for both our internship program and what we call our MIT program, or merchandiser and training program. Merchandiser is another name for trader in our business. And so with those opportunities, the internship, I believe, is a 12-week program in Overland Park, Kansas, which is a suburb of Kansas City, Missouri. In that you kind of learn you start at it more from the logistical end of the trade, but you kind of, spend some time trying to talk with customers, get to know, the type of people that are in the business, understand kind of the freight movements involved on both the truck side and the rail side, and just kind of overall get a brief introduction to the business. And then the MIT program is a 12-month program that's for new grads. And it's kind of similar in structure, but it's a much longer period, and it is intended to be for someone transitioning into full time. That is what I was recruited into fresh out of college. And with that, you do 2 6-month rotations in 2 different offices for the company. So I initially started out here in upstate New York, then did 6 months in Kansas City. Then I moved on up to a junior trader role, lived in Omaha, Nebraska for about 7 months. And then moved back out here with another opportunity. So the kind of focus of the program is, to start out with these 2 rotations that give you an introduction to what we do, and then kind of be able to take it to the next step and become a full-time trader in the company. So it's really an excellent opportunity. The pay is fantastic. The hours are limited compared to what other people that we graduate with end up doing for similar pay. I usually work about 40 hours a week, and I'm making money that most guys are having to work by 60 for. So it feels pretty nice in terms of that in our business. So definitely come check it out. We got some good things going on.
hey, thank you, Dylan. Is there any questions either online or in person? or I'm sure we'll see you more Friday so we can follow up then. Good? Cool.
Sounds
Hey,
good.
awesome. Thanks, Dylan. Look forward to talking to you more and hear about your experience at Anderson's on Friday. Appreciate you joining the call.
Thank you, guys.
Yep. With that said, we'd like to introduce Reed Page. He has done several different roles in trading, and I'll let him take it away and explain kind of his path, how he got there, and what he enjoys most about the career.
Heck yeah. All right. I guess I'll just go. So something though about where the direction, you guys should totally check out that thing with Dylan because it sounds awesome. I'm like, where do I sign up? Because energy freaking is ridiculous and it's insane. And like when I was actually in my last semester, or maybe it was my second to last semester up at Utah State, I had Schooler come and they did some, they're another grain, an ag trader group out of the Midwest. And I sat through their presentation and it was super cool. But I was like, nah, I'm going to be in the energy industry probably. And now I'm like, geez, I should have taken the grain route because maybe had been more normal, but
it's not pretty saying you're in grain, but it's pretty nice at times.
I know it's like everyone's like, oh, it's not very sexy, right? I'm like, but it's really cool. Like the fundamentals are super interesting and like the market is just really interesting and trade is trade, man. And like in commodities and trade is awesome. And, but there are serious issues in energy, especially when you're in a fossil fuel, well, in energy in general, right? Because especially right now where with the way the society's going and with climate change being a real big issue, it's just like, man, I signed up for chaos probably for the rest of my life, which, is really, it's really what I've always thought, I guess, was just crazy stuff because I'm a super risk-loving personality and stuff. But boy, when you have 3 kids, you start dialing down the whole risk-loving personality and like all you want to do is know that you can pay your mortgage every month, So then being in the energy industry becomes like, oh man, it's a little bit of a whipsaw. But anyway, to get started, at any rate, all of you attend the thing on Friday because it sounds freaking great. So, so I started. I'm from Eastern Utah. I'm from Roosevelt, Utah, which is Duchesne County, Utah, is the #1 crude oil producing county in the state. It is the 3rd, I guess, biggest natural gas producing county. The first would be Uinta County, which is just further to the east. That's where my wife is from. And all of my family and all my friends are still in the Uinta Basin. So I grew up in the thick of the oil and gas industry from a young age, surrounded by people in the industry. I started as a rig. I started as a rig welder when I was 17. I worked for a drilling company in their yard on the west side of town. Like potentially an illegal hire considering OSHA rules. Like, I don't know, but back in 2006, it was a booming time. And so they overlooked a lot of things as long as you could do the work. They let me in, they paid me pretty well as a teenager. And like ever since that, I did a whole bunch of other stuff in midstream and natural gas processing and pipeline stuff. Shortly after graduating high school, I served an LDS mission, went to Chile, went to South America, and then came back. Thought I was going to go to Utah State and study mechanical engineering with an aerospace emphasis. And then after my first semester on campus, I had a presidential scholarship to Utah State, but my first semester on campus, fall of 2010, was with a guy named Craig Peterson, who I think was mayor of Logan, and that was Econ 1500, Intro to Macroeconomics. And at the end of that semester, I changed my major to economics, and following the next semester, I added the dual major of finance because I found my home. Econ and finance was like, and then I just nerded out for the next 10 years. So here we are now. But I got to know Paul quite well over the next couple of years being in the program. And also we went to South America together on the career exploration trip to, on that year, it was Argentina, Brazil, and Peru. And life-changing experience. I don't know what the programs are looking like these days, but holy crap. The only time I borrowed money through college was to go on, I think, that trip, as well as London. I also went to London and a short trip to San Francisco and Seattle with some of the staff as well, they were all eye-opening and no regrets whatsoever. Absolutely 100% worth the money to go on those exploration trips and meet some just amazing people. Paul and I had lunch with this guy named Ruben, I believe, who is in charge of derivative structuring for Citibank, I think, in South America, I believe. And I was like, it's funny because in retrospect, I now realize how freaking cool that is, when at the moment I had no idea how awesome it was, because I didn't even know what was going on. And in the car on the way there, I was like, Paul, what is derivative structuring? I remember specifically asking that question in the taxi, you know, and he did his best to explain it to me in short terms in like 4 minutes. But geez, yeah, but it's funny that those experiences in retrospect continue to serve you, because you gain more from the same experience as you gain more experience, and you have a different perspective as you remember those moments, right? So thanks, Paul. So after school, after I graduated in 2013, I had 2 separate job offers. I had one to work for these Singaporean guys, this group out of Singapore who had done some sort of a joint venture with these Norwegian investors and Swedish investors, and had acreage in Western Colorado as well as in Western North Dakota, up in not in the Bakken, but in the Madison Three Forks, so similar area. It's basically in the same area, just different formation. And so I became the sort of administrative assistant to the U.S. operations manager, who was one of my close friends growing up. It was his dad, who was a petroleum geologist. And so I got recruited to go work for them. That was a complete cluster for like 5 months, potentially the 5 worst months of my life, working for such a terrible, messed up organization. And I would like sit in my office and cry, you know, like because of how stressed I was all the time. And I had no sleep for months, and getting left out on drilling rig sites for like weeks on end to take care of all this crazy stuff that didn't make any sense for someone with my lack of experience to try and take care of. And so anyway, the other offer that I had upon graduation, I hit those guys up again and was like, do you guys have any space? Like, do you still want me potentially? And they're like, heck yeah, we'll figure something out for you. And so, you know, they brought me back over, and that was Summit Energy, and I'm still with them now. That was, as of about a week ago, that was 7 years. So 7 years ago this month that I jumped in with Summit Energy. And I started out with them not having a clue what they did for their business, and not having any idea whatsoever, really. I just, they sort of explained it to me, but then for a year and a half, I sort of was everybody's guy between the sister companies, and I did all kinds of random field stuff out in the oil field where I'm from, just because I knew the lay of the land and I knew the people out there. And so I did stuff for our workover rig company. So we have a rig service, oil field service company out there called Peak Well Service. And I did some weird special projects for those guys. And I like fixed people's spreadsheets and for the gas trade company, because those, for some reason, they couldn't get their stuff together. The people who were in operations weren't, I don't know. They had me do a lot of weird stuff until about a year and a half after I had been working for them. There was an opening finally on the operations team, and they dropped me into a pipeline scheduling position. And in natural gas trade, a pipeline scheduler is basically like trade execution. Is the guy that actually lines up the logistics for natural gas physical volumes to flow from point A to point B, from where it's produced in the oil and gas field, say in eastern Utah, through a large interstate pipeline, a FERC regulated pipeline like Dominion or Questar at the time, to bring gas volumes from the field and into the actual demand areas like the Wasatch Front, where it gets delivered and then distributed over Questar's utility. The primary business of Summit Energy was then and still is to buy natural gas from the field, from a place like where I'm from Roosevelt, where the gas gets produced out of the ground, pushed into a large pipeline, and then transported to point B, which is Wasatch Front City Gate, at any of the different points here. And then it gets distributed to our C&I customers or our commercial and industrial customers Like, for example, pretty much every Smith's in the Valley, every Staker Parsons batch plant for asphalt and cement, we are their supplier across the entire state of Utah. So that's our biggest summer load. A whole bunch of hotels, all the Harmons, many school districts, Salt Lake Community College, Hogle Zoo. There's like 600-700 meters out there, lots and lots of customers. So we're the biggest by head count in terms of the number of transportation service customers here in Utah on the Dominion system. Transportation service, or TS, is a type of customer on the system, on the utility, that is allowed to buy their natural gas supply wholesale. So me and my house here in Lehi, and all of us who are on Dominion, in our apartments or in our homes, we're buying what's called general service or sales customers. So we're buying the gas that the utility provides themselves. They're in charge of sourcing that supply. And there's a team of guys down at Dominion in the downtown office, although they're all working from home right now. And they're in charge of sourcing that supply for us as general service customers. But if you're big enough, you can change your service type, and you just have to pay them their pound of flesh to use their system. And then you can go out and you can buy a much cheaper wholesale natural gas supply from a company like Summit Energy. And so we buy at one price upstream, we transport it, we pay that cost, we try and minimize that cost, and then we deliver it and sell it to the customers downstream for a higher price. So we're buying low, selling high pretty much all the time. That business is really, really nice, very stable. Didn't lose a dime during the lockdown. We didn't even blink. So it's a good spot to be in that type of business that just wasn't even touched at all. In contrast, we also have a crude company, like I mentioned while we were just discussing, while we were waiting for everyone to get on. We have a crude company that does much the same thing. They buy the barrels from the lease or right where the well is actually pumping. We contract trucking, we manage the logistics, and then we have it delivered to our customer, which is usually a refinery or a refiner who picks it up at a pipeline point somewhere in Wyoming or Colorado. And that's where custody is transferred. Well, so many wells were shut in because we had this negative price anomaly on April 20th that our volumes that we generally purchase, they were reduced dramatically. So many producers, small and medium-sized producers, had shut in their oil wells because it was not economical for them to continue producing. So our revenues got killed, just got murdered during months of April, May, and June. They're recovering in July, August, and September. And honestly, I'd have to double check with my trader, Dallin, who was also one of Paul's students. And I recruited into the companies in 2015, I believe. And so continued the chain of Aggies working for Summit Energy. But so that's how that one's gone. But when I jumped into the pipeline stuff, I guess to go back, when I jumped into the pipeline stuff, it was spring 2015. And I had a real knack for how all the gas flows worked. I picked it up super, super fast. I also started conferring with our accounting group. And actually, I need to put some color on this. Our company is like 9 people. It's not like the Andersons, right? Where there's like I don't know how many people are in that company. That's like a real company, okay? Like a big company. Our company is a real company, and it's actually probably a much more common situation to have there's tons of small companies out there that are trading and doing different things, and they're filling these market niches and stuff. And so there's us in Summit Energy. We got like 9 or 10 people, and that's not including my C-level guys, which, what do they do, right? They don't actually do anything, really. It's all of us who are out in the bullpen who are actually doing things, and they're gone for 3 days out of the week, and the work still gets done magically, right? So there's 3 people. Let's see, 1, 2, 3, Rick, Sam, and Jason. Jason also an Aggie from our program. They're our accounting group. There's 4 of us in operations. I'm the director of marketing operations. Charge of Chris, Arlander, and Mike. And then I have 2 guys in marketing. So that's 4, 3, 2. There's 9 of us. That's our company, and it's really small. But back in 2015, our ops group was 3 people. We had a trader, an ops manager who was the lead scheduler on the pipelines, and then the junior scheduler, which was me. Well, I got really into it really, really fast. I just glommed onto it and then loved everything that we were doing because it was so interesting and so crazy. But I also very quickly found out that within our tiny company, communications were so poor that we were taking losses in way random places. And I was tasked with figuring it out by my CEO. He's like, Reed, now that you're in the ops group, like, I really need you to figure this out, because the other two people, the trader and the ops manager, they can't seem to fix this problem. And it's called imbalance. And it's like a management of inventory that you end up with on pipelines when you have deliveries that are larger than your receipts, or that are far less than your receipts. So you can end up with an inventory on the pipeline of gas that you own that didn't get sold, or gas that you sold that you never bought in the first place. So in the gas business, you could end up with negative inventories, which messes with everybody's, concept of accounting. And so imbalance is a super weird abstraction when it comes to managing inventories. And I caught onto it super fast. And for whatever reason, my ops team and my accounting team, they hated each other because they were always arguing about the same thing, and they never understood each other, even though we all speak English. And so I started just going to lunch with the accountants because they were funny guys, they were cool guys, and just became, I just liked them, and we just went to lunch together, and that's where we would discuss what the real problem was. And they would explain it to me. And then we would come back from lunch, and then I would turn around and try and explain what was going on to my ops team. And it took forever for them to understand what had happened. And I had to retool all of our spreadsheets so I could manage these imbalance anomalies, and started doing these estimates of what I thought our gains and losses should be, and started pegging them within a penny, like within pennies of where our gains and losses on each month would be, which basically meant, yes, we had a handle on the problem, and then we could start fixing the problem. So that was like my first claim to fame within the company. And I did that within like 4 or 5 months of jumping on the operations team back in 2015. Another 5 months later, my operations manager left the company for a competitor, and I became the operations manager. So with less than a year of actual pipeline scheduling, I became the lead scheduler, which made no sense. But as it often happens in small companies, you are given opportunities for growth very quickly if you show that you are probably able to handle those incredibly stressful moments, because it's like, good luck trying to hire somebody out of Houston or out of Denver or one of the big markets to take and fill that position. It really doesn't make much sense. It's hard to bring someone out from one of the big markets to a small market like Salt Lake City and be able to pay them what they were getting paid back there. It just doesn't make sense. So there's a benefit to the route that I took, which has always been, I would rather be in a smaller company where I have instant access to actual decision makers, and every move that I actually make can have a real impact on the bottom line of the company, right? And so you get responsibility is just dumped on you. Like, it's just what I wanted, until you have it, and then you're just hating life. But you bite off more than you can chew, and you just sharpen your teeth and just keep on chewing. And months later after that, my trader quit and retired. And so just over a year after I had started on pipeline scheduling, I had taken over both the operations manager's task as well as the trader's tasks. And that was really, really hard. And I hired a friend of a friend who I found delivering sandwiches for Jimmy John's, who had just barely graduated with his finance degree from the University of Utah. He actually was at Utah State for a year or two, but he ended up moving back home to Salt Lake City so that he could save money. And he finished his degree at the University of Utah. But he was like I said, he was delivering sandwiches for Jimmy John's, and he hadn't even thought twice about looking for a job to actually put his finance degree to work. But we were playing Settlers of Catan in my friend's basement, and he was extremely competitive, I guess you could say, because that game has a lot to do with estimating expected values and strategic decision making, with scarce resources, right? And I was like, dude, this is exactly, sort of what I do on a daily basis. Is we're making these decisions on the fly. They're risk decisions, and we're sort of calculating really weird abstract expected values all the time. I was like, you'd be killer at this. He is now my trader. That was 4 years ago. Yeah, it was 4 years ago. Chris, He looked terrible on paper. He interviewed very poorly with my CEO, and he's like such a freaking goob. But I liked him, and he's perfect. He's like, I was like, we're gonna moneyball with this guy because he will be undervalued, and he's a genius, and he's a nationally ranked Yu-Gi-Oh card player. Like, he's nuts. So he's my trader now. I don't really trade anymore. So ever since then though, I picked up Chris. I picked up a guy named Mike who's been in the industry for 20 years. He's in his 50s now because his company was acquired, and like all the energy offices here in the West are just diminishing, and they're all consolidating to Tulsa or consolidating to Houston. And so our company has picked up people like that who wanted to stay in Salt Lake City, stay in the market here. But the labor market for energy professionals is pretty thin on both sides. When something like that happens, Summit Energy people knock on our door first, pretty much at Summit Energy, and they're like, "Hey, is there any way you can make room for us?" And so we do that. We have, and we picked up some really good people. But Mike, my other trader, he actually had a career in grain trading for I think 10 or 12 years before he went into energy. And so we've had lots of good grain conversations about his prior life in trading grains. He was essentially a merchandiser, and he would be up there testing, testing loads basically with this probe. They have to stick down in the grain and grab a sample and then check it for humidity and all these things. So that's really interesting. I also poached a kid from Goldman Sachs right across the street at 222, who was very, very unhappy with his life at Goldman Sachs in GIR, with the workload and the work type and with the culture. And so he was just begging for something else. He was working in GIR, which is Global Investment Research, extremely smart, extremely analytical, and I liked him a lot. And so I brought him over, and he's part of my ops team now. Honestly, not the best scheduler, but I like him for a lot of other things. And so a bit of hand-holding. When it comes to pipeline scheduling and trade execution, there's so much abstraction and so many weird things that you have to just sort of learn to roll with, that it is really not for everybody. And the trader that trained me, who retired shortly after I took over for him, he told me that 2 out of 3 wash out in pipeline scheduling because it's just hard on your brain. And I don't know if that's unique to natural gas scheduling, but maybe there's this level of abstraction that makes it really just harder to wrap your head around. And it's like if you had a kid with an electrical engineering degree, maybe he'd do even better because they deal with a lot of bogus abstractions. But power trading would probably be quite similar. Power trading or real-time trading would probably be pretty similar. That's some very, very strange stuff in power. But that's basically my story. And now, like I said, I oversee those guys. I could do some trade. I don't really want to, because I don't want to get up at 6:30 every morning and just be balancing our positions. So I let my buddy Chris do all that. He's amazing at it. He does a lot of weird price strategies and weird arbitrages in the morning, and he's always hit just base hit after base hit after base hit every day. And then I just make sure that they don't take on weird things that are too risky. So I'm sort of their default risk manager for the company as well, because I have learned the hard way about taking risks for our company. A few trades that went sideways and lost $100,000 over the course of a month, or $500,000 over the course of a month and a half. And my CEO gracefully was like, don't beat yourself up too much. People make mistakes. I'm like, well, it's a good thing we made millions and millions of dollars over that same course of time, and all those good trades sort of buried the bad one. Also, it wasn't totally my fault. I was just standing there. I was the one that signed the agreement that somebody else in the company would have signed. It's just that I was the one that did it. So it's hard to take all the blame. But I guess I actually have no regrets. The direction that I took is amazing. Energy is really cool. And now the future going forward, I'm really a business development guy now. I'm looking for interesting ways for us to add to our bottom line. I do deals with oil and gas, with oil companies to actually buy their production. So I'm sort of the point person on making those deals to make these term contracts where we purchase the production that comes out of their oil wells. And I just take care of weird special things, like we're moving into business into Oregon. I have to take care of getting us fully, legally ready to transact in the state, within the state of Oregon. There's a lot of research that happens there. I'm pretty much the point person as well when it comes to legislation, things that could happen with the governing bodies within the state of Utah, and dealing with the utility. There's a lot of, sometimes we're very adversarial with the utility itself, but I have great friendships and working relationships with the people that are actually doing the work in the utility. So I generally let all the bad blood occur between my management and their management, because again, they're not the ones dealing with each other on a day in and day out basis. So that kind of goes back to making sure that you're maintaining very, very positive relationships with everybody that you are consistently doing business with. Again, if you're cool to people, people tend to be cool to you, and business is a lot easier to be done. I am now turning towards, or spending a lot of time thinking about decarbonization of the natural gas grid, which is such a strange concept. And the fact that realistically society will be trying to decarbonize over the next 20, 30 years. 2050 is a big goal for many, many organizations, including BP, which is crazy. And so I think there are a lot of interesting opportunities in energy in general, but it's a really tough place to break into. Maybe it's not unique, right? It's really hard to break into trade in energy. If you don't have the pedigree, it's tough. You can't get into something like a Shell trading program or BP's trading programs, but there are very interesting routes. The number one way to get into doing anything that I do is become a scheduler. And if you can become a scheduler, like and you wrap your head around it and you're fast, you will see how the traders are making money. And then they will see that you understand what it is they're doing. And they're going to be like, ah, yeah, this kid has a future. Let's get him off the pipes as soon as possible. Let's get him trading, And so that's it. You need to find a scheduler position if you're interested in power trade, gas trade, or crude. Coal, not so much these days. Coal is definitely on the way out. So, but there's a lot of interesting things to consider since we're decarbonizing, right? And everything's going green. And like I'm looking at the future of renewable hydrogen going into the methane, into the natural gas pipelines, which is a real probability in the future. It's a weird concept. Figuring out how all these different markets sort of interlace with each other, and there's no telling what next year is going to look like. There's no telling. So yeah, my job now is to look for the next $1 million of net for our group of companies. It's like, how are we going to reinvent ourselves and find interesting new lines of business? And so I've got a handful of crazy concepts, that I'm kicking around and pitching to people. And I'm pretty excited. It's all going to be really interesting the next few years. So we have like 15 minutes till 8:30. I don't know what the actual time frame is. I don't really care if it goes late, if people are asking questions. But I'll turn it over to you guys now. Hopefully this was sufficient, for what you guys were looking for. But go off mute.
I got a question for you, Reed. So you talked about your two traders, Mike and Chris, a little bit, and you kind of touched on it briefly, but what would be like a typical day for them? You said they get up at 6:30, they're up early, but what would they do throughout the day, and what are their hours like? And what, just like a typical day for them? Oh,
okay. For Chris, who's our daily, who trades our daily stuff, he gets up at 6:30. He looks at the positions that we gave him for that trade morning. From all of our pipe positions, we balance our supplies and our supply and demand, because supply fluctuates and demand definitely fluctuates. So we'll give him his positions late in the afternoon of the day before. He'll pull them up in our shared spreadsheet, and he'll say, all right, these are all the things that I need to do. And then between 6:30 and 7:30, he'll do daily trade. It's a certain window of a specific type of trade, whether he's buying or selling, based off of daily price index differentials. So boy, I'm not going to get into that. But so it's a type of trade, and he'll do that for a few hours. Then the style of trade changes to fixed prices, and so he'll be doing fixed price trade for the next few hours. In the middle there, sometimes he doesn't do any of this from the office, usually early in the morning. He'll get some of the trade done after an hour or two, and then he'll drive into the office. He only lives 15, 20 minutes away, and then he'll finish the fixed price trade if there's anything left. If it's really, really busy, he's going to not even bother coming into the office until he's done. And so he might finish with morning trade for the next day's gas flows or the weekend if it's Friday. He might finish that up at around like 10 o'clock, and then he'll mosey on into the office. And then he'll take care of scheduling. So he does a bunch of the scheduling on our pipes, on the pipes that he trades. So he both trades and schedules, and he matches up all the flows. And then at about 12:30, when that first cycle hits, everything goes silent. And then we all either work on whatever side stuff that we have going on, or we all go to lunch, or we all just split our separate ways. Chris will usually be done, and he might just go home at 1 or 2 in the afternoon. To be honest, it's a pretty good gig, especially in the summer, because flows don't fluctuate too much. Summer is like a really nice time for all of us, and we really kick back and we golf more and go climbing more and stuff, generally in the afternoon, right? For Mike takes care of monthly trades, and so he'll do trades during the last week of the month for the upcoming month. He'll set up trades on flows that will occur, across the entire month ratably. So he sets up all of our bid week stuff for the coming month, and he's busier doing trade during normal business hours in the office. So Mike doesn't have to get up early. He can show up to the office at 7:30, 8 o'clock, and then he can take care of those month-long trades. So he's very like 8 to 4, He's very 8 to 4, and he manages our some of our imbalance positions and some of our storage positions. We do have a storage position that we swing seasonally. So so Mike just takes care of some of our bigger positions, and then Arlander to my left, my other scheduler, he'll get in 8 or 9, take care of all scheduling that Chris had already traded on one of our pipes on Williams Northwest Pipeline. And again, if things are really smooth during the day, he might wrap up and go home at like 2 or 3 in the afternoon. During the winter, everything gets really crazy, and we might be there from 7 in the morning till generally till 5 at the latest, because that's your second cycle of the day, and there's just no point in staying beyond there. It's a seasonal thing. During the summer, things are cool, things are awesome, and we try and take advantage of things being slow and easy. And, we used to catch a movie on Tuesday afternoons at the nearest like Miller Megaplex for $5. Me and my accounting group, like we would just bail at 1 o'clock and catch a matinee. Not so much these days, obviously, but, so things are awesome in the summer for us, and then can be super chaotic and super stressful during the winter. For me, I got a really good gig because I can show up at like 10 in the morning. And then I could leave again at like 3. My express job is to make my CEO's job better, like easier, right? So I oversee all things, and I grease the gears between the different groups, marketing and accounting and trade and operations. And I watch and I just make sure that people are doing the right thing. So I'm sort of overseeing everything and making sure things are good and people are gruntled, and like just, greasing the gears, making it all good. So I'm as busy as I really want to be, and I tend to want to be busy. So I'm always fiddling with all kinds of stuff. So I fell into a good gig. So hope that answers.
I have a question.
Yeah.
Hey, y'all, Reed. I came on a little bit late. My internet connection was weak, but I have a question about the trade that you do. Do you buy from wholesalers and sell to retailers? Is that the type of trading you do when you talk about trade?
Reed, are you still there?
You lost them.
He dropped out. Who knows? Let's maybe just give him a few seconds, see if he comes back. Yeah, you scared him. Your question was too hard.
Oh man,
I'm just kidding. Yeah,
I'm
hopefully
just trying to
it
find an opportunity to make money.
comes. Hey, Dylan, are you still there by chance?
I am, yeah.
So while we're waiting for Reed to reconnect, one question for you is what attributes you feel like are really good for young traders coming into Anderson's?
Yeah, great question. I'd probably hit on two or three kind of main attributes. The first is just driven. A lot of what we do.
Hey guys, I'm back.
Nope, there he is.
Yeah. Sorry about that. My internet at the house just went away, I guess.
Do you want me to?
But you guys can continue though if you want.
Yeah.
Well, yeah, they had
Oh.
just asked what were a couple kind of key attributes that would be good for a young kind of up and coming trader. And so first one I was hitting on was just driven. A lot of what we do, you have to kind of go out and find yourself. You have to find new business opportunities. You have to find where these opportunities or inefficiencies in the market are. And if you're waiting for something to come to you, it's not going to happen. And so
No.
having being driven is one thing. Another is being able to be personable with someone or with anyone. A lot of what we do involves cold calling or warm calling, and you have to kind of build and maintain a relationship with people over, a long period of time. And so, if you're not able to kind of have those phone conversations and, establish yourself as someone that adds value just through a conversation, it can kind of be tough to set yourself apart. So, if you can have a combination of both driven and personable, and then obviously have an understanding of, what's actually driving what you're trying to do within your trade, then you're well on your way to, having a successful career in trading, in my opinion.
Yep, that's pretty much it. I mean, you have to have like this curiosity that drives you to just solve weird problems. And but honestly, that's it. I mean, it's that drive, the initiative, and the personability. That's it. What I can't figure out are traders that are incredibly not personable, that are just absolute jerks. And I don't know how they exist out there. I wish they didn't.
My view on it is they started off personable, got to the point where they didn't have to be anymore, and stopped faking it anymore.
Maybe, but it just makes no sense because it's like business is better when you're personable, and it's more fun and more interesting. So, but yeah, personable and curious and I'm driven. Like those are pretty much it. I mean, you got to have a good handle on numbers. Like if you can't do numbers quick in your mind, then it's going to be a little tough. I guess it just depends on how quick your trade sort of cycle is. But you've got to be able to wrap your head around the fundamentals, and like Dylan said, like understanding how what you do is actually adding value to the person on the other end of the phone, or else they're not going to be interested at all. And you've got to be able to express that. You got to be able to explain to them or show to them in no uncertain terms, how you expect to add value to them, even if it's just pennies, because the pennies add up. So, yeah. If you're not personable, get personable.
Learn how to talk to someone you don't know. You'll be set.
Yes, absolutely.
Awesome. Thanks.
Dylan, I'm glad you're on. Dylan, I'm really glad you're on. You really covered that empty space there. Yeah.
Glad to be here. I enjoyed listening to kind of your story and how you got into it, because it was a different path than mine, but, kind of got into it, obviously, within our own industries and whatnot, but similar types of, kind of logistics focused roles here. And so I really enjoyed hearing that experience, and just kind of shows that, you don't have to have one set path to get anywhere in life, whether it be trading, whether it be, some sort of other business, whatever it is, just find your path and blaze on through it.
Yeah, absolutely. There are so many parallels when we're trading and managing logistics in any commodity. The skills are incredibly transferable, right?
Absolutely.
You just figure out how those logistics are slightly different, and the fundamentals can be vastly different, but they're all interesting. So,
Oh, yeah.
More questions.
Yeah, I'm going to ask my question again because I lost you earlier. Still there? Oh, man. Can you hear me?
Yeah.
Okay, cool. So when you talk about trading, are you talking about buying from wholesalers and selling to retailers? Or what kind of trading are you talking about? Because I came on a little bit late. My internet connection was pretty weak. So that's the first question. And the second question is, if that's what you're talking about, are you just talking about within the Utah market, or is this the U.S. Nationwide, or like how big is the trading?
We're super small. I mean, we probably we netted $4.5 million last year, like as a company. Although our revenue, right, with total throughput is hundreds of millions of dollars. It's just the margins are so thin. We're chasing pennies, per decatherm, per MMBTU that flows. And so, but we're strictly regional. We're here in the Rockies. We have gas that, I guess your wholesale versus retail question. If I have excess production that I'm purchasing from producers in an area that I can't make use of it to my retail customers, which has the best markup, I will sell that off on a wholesale basis to other wholesale trade companies who need that supply for maybe their downstream retail markets in other utilities up in the Pacific Northwest, maybe. Or if I am short on the day and I have more of my own retail, my CNI customers, my industrial demand is in excess of what I'm purchasing from my producers upstream on the pipe, I'll buy wholesale from somebody else who is in between another set of producers and me. So there's lots of marketers. Like for Dylan, they're called merchandisers. For me, they're called producer services managers or marketing wholesale traders, right? And so we'll aggregate volumes from lots of producers, and then I will either take it to my best markets, which are my retail, they have a higher markup. I'll make more on a per decatherm basis. Or if I'm long, I'll just sell it off, and I'll sell it off on the day, or I could sell it off on the month if I have an excess for a given month, like during the month of May or April, before all of our asphalt demand comes on, we oftentimes have a lot of excess supply for the month that I just need to unload. And so I'll have my guy Mike do those trades. And so he'll trade them and he'll sell them to BP or to Shell or Conoco or any number of other trade organizations out here in the West that need to fill their positions. Or if we have excess, we take it to our storage facility and we dump it into our storage. And we'll buy low in the shoulder months for $1.60 or whatever, which is what we're doing now. And we'll sell forward against it. We'll hedge it, and we'll sell fixed prices with a big financial broker like Shell. And I'll take those chips off the table. And so I'll sell forward all my gas in December, January, and February, which is literally what we did. That's what our current book shows. We're selling it at over $3. So we're making $1.30, $1.40 spread per decatherm on like 800,000 decatherms. Then we have costs. We have a bunch of costs to take out. We'll probably walk away with about $500,000 on those trades for this storage cycle, right? So that's what our trade consists of. There's some retail, but there's a lot of dealing with wholesale. It's dealing with other traders, other marketers like us.
And how much capital is involved to create the $500,000? Just an estimate.
Oh, so I guess our WACOG, our buy WACOG is probably, with all costs actually wrapped into it, calculated, I think on our meeting this morning, it was like $2.13. So call it 830,000 decatherms times $2.13 puts us at, you know, $1.7 million or something like that worth of gas that we purchased. And we're going to flip it for $2.3 million or $2.4 million, somewhere in there. And then there's a bunch of costs involved that we all have to pay. And we'll probably walk away with $500,000, you know, in gross margin. So.
Do you have storage facility whenever you have excess? If you're acquiring the excess of, let's say, of gas or natural gas or gasoline, petroleum, do you have a storage facility when you buy it, or how do you do with it?
The storage facility for natural gas is a really weird animal because storage is hard to come by because it depends on geology. In the Gulf, they use salt dome storage, which depends entirely on them having huge salt formations underground that they can solution mine and store compressed natural gas underground. Here in the Rockies, there's one giant or much larger facility in Clay Basin in Daggett County, Utah. You'll have to look it up. It's called Clay Basin Storage Facility in Daggett County up near Flaming Gorge on the Green River. And that's operated by Dominion Energy Questar Pipeline, which was recently announced to be sold to Berkshire Hathaway Energy. And we own capacity on that facility. I can't remember how many BCF, how many millions of decatherms can be stored there. I think it's like 53 or something. We only have like I said, 830,000 decatherms. So like 0.83 BCF of storage that we owned or that we've contracted for like a 9-year period or something like that. Can't remember. And we have to pay an annual storage cost, a fixed storage fee for that capacity to own it, as well as the cost of cycling our storage through. So there's fuel for injection. So there's some variable costs to that. So natural gas storage is a very strange animal, but that is, I think, the cheapest storage facility in the entire country. And so that's kind of cool that it's in our yard and we get to play with it. The other storage facilities for crude oil, for liquids and stuff, they're not as complex because they're just giant, you know. I mean, you've seen pictures of Cushing, Oklahoma, and all the tank farms that are there. But that's an interesting animal as well. And you know, when storage fills up, then all of a sudden prices start going totally haywire, which they have in the last few months.
So you said margins are slim. So when I ran those numbers, like around 1.9 million, right? 830,000 times 2.3, about 1.9 million. And then you're saying you can turn a $500,000 profit, give or take, which is like a 26%.
Oh yeah.
Margin.
So margins are,
because like I'm just curious your margins on this.
Sorry.
And
those are, so when I say margins are slim, I'm talking about when you're just buying and selling. If I'm just going to buy upstream, I'm going to buy for $1.85, and then I'm going to flip it on a wholesale basis for $1.88 to a trade counterparty, or $1.87. It's like, oh great, I made 2 cents on 17,000 decatherms for a day. Like, that's okay. If I'm taking it to a wholesale customer, I might make like 30 or 40 cents per decatherm, which is actually really quite good. Net of cost, maybe it's more like 20 cents. So I on a $2 commodity, that's still okay, you know, but now we're limited by volume, you know, we're talking in the winter, maybe like 40,000 decatherms a day. And that's on the buy to sell. When we're looking at a storage play, your margins are way better because you're buying low in the spring and or in the fall or throughout the summer, and then you're going to sell it, you know, when the seasonality peaks and gas commodity costs, the market is way high in the winter because demand is so high. And so everyone's withdrawing from storage. And so, yeah, that's where you can make a real seasonal spread of $1 plus $1.50. The last few years, you have not seen those spreads, but this year is nuts. The last 2 years have been really, really good for our storage. And so that's where the value, storage has real value. And if you play your cards right, you can make some really good money cycling your storage, which is exactly what we're doing right now. So I just wish we were doing it with like 10 BCF. I wish it would be awesome. But hey, for 10 million decatherms at $2, I'd need $20 million to fill up my storage. And that's a lot. That's a wad for us. And we're a small company. So
as for how you guys acquire capital that you invest with, Is this obviously like every year you're turning your capital, right? And you're making margins on that capital, but are you out acquiring more capital so that way you can, invest at a higher, capital ratio, or is it that you guys don't grow, you just basically hold on to the same fund and then take your profits from it?
So we're privately owned, primarily by the KC Gardner Development Group, Kevin Gardner and the family office, and then a number of other partner investors. But the money that we use to cycle this is mostly on just a giant line of credit, So our capital cost might be 6 or 7%. I don't know. I actually don't know. I don't mess with our accounts and stuff, but we look at it as a cost of capital of 6 or 7%, maybe, and we cycle it, And so we're not really using equity cash from our investors to do all this stuff, and which also forces us to be a little bit more conservative on the YOLO plays that we do. Like, I'm not just going to take this giant one-sided flyer and then just hope that the market pops, because we could end up upside down and it's all on borrowed money, So it's you can't just grow your storage position all by itself. Like it needs to fit into your greater logistical position with your book on both the buy side and the sell side. Mostly it needs to sort of match up with what we're doing at Citygate with our largest customer base. And so, but we actually would like to, I think my CEO would be way into buying, like doubling or tripling our total storage position if that storage was available. But, there's a finite amount of storage and it's all contracted, because it has value, everybody wants it, right? So the bidding process on that is weird because it's federally regulated in the way that they do it. It's not pure price. There's a max rate for storage capacity, and you have to bid based on years, on how long you want to own it. And so you're bidding in terms of years and months instead of on price, because the price is fixed. You guys might hear my kids screaming in the background, but it's dinner time / bedtime, and I assure you they're being well treated. But anyway, I hope that answered your question, Taylor, more or less. Also, any of you guys can totally connect with me on LinkedIn. Don't be afraid to hit connect, and then hit me up and be like, Reed, I'm going to be in Salt Lake. Can we meet up for a sandwich? I'd be like, heck yeah, come down to the office and meet everybody here, assuming everyone's there. We're all distancing. So, yeah. And then I'll just talk your ear off and I'll answer every question you ever had. So.
Awesome. Well, we don't want to keep you too late, Reed. Is there any last minute questions from the group before we kind of close things off?
I just want to thank you, Reed. This has been great. Thanks a lot for taking some time. You too, Dylan. It's been really cool to see what you guys are up to. So thanks a lot for taking the time tonight.